Good morning, everybody, and happy Thursday. Today's December 21st, 2023, the shortest day of the year. So happy winter solstice. Don't worry, guys, the day's going to start getting a little longer for you folks in the northern hemi, but we do have the big bag of frozen suck of Janu-February ahead of us to get through before we get to the nice, long, warm days. But the story today, another country has left OPEC. Is the back of the oil cartel starting to break from these lower prices? Angola, which up until about 5 minutes ago I couldn't find on a map to save my own life, announced this morning that they are leaving OPEC over disagreements about cuts to their production quota. You guys may recall that about 2 weeks ago, 3 weeks ago, we were talking about OPEC cutting oil production and how there was disagreements, particularly among some of the African countries who didn't want to see their quotas cut back. A lot of these countries have been struggling to produce enough oil. Their production has been in decline. And so OPEC has been cutting their quotas, which achieves the effect of sending prices higher without actually affecting the amount of oil on the market because they're lowering quotas to what they're already producing. But that would prevent those countries from increasing their production to where the levels previously were. And Angola was one of the countries that was holding out. They really didn't like that idea. And well, apparently they didn't like it enough that they are leaving OPEC. So the number of countries participating in OPEC is now down to 12, which means OPEC now has less control over the price of oil because not everybody is going to produce what they tell them to produce. Angola is taking back a little bit of their sovereignty. So OPEC will have less of an ability to cut production and affect global oil prices. And, it doesn't help. The United States is the biggest oil producer in the world, and we're certainly no big friend of OPEC. And when the biggest kid on the block won't participate, it's a little harder to rig prices. And so one by one, countries are leaving OPEC over the last few years. Ecuador left OPEC just a few years ago. Qatar and I believe Indonesia left OPEC before that. So now they're down to 12. We'll see if Angola is the last. Oil prices are falling a little bit today. They're down $1 and change on that news. Also, no escalations in the last couple of days, knock on wood, in the Red Sea. And so oil prices are coming back to where they were near the lows of the year. Keep an eye on that BAM, the Bab el-Mandeb Strait. We'll see what happens there. Also going on today, Javier Milei is coming through with some of his campaign promises. He announces that he is privatizing, well, pretty much everything. He hasn't actually done it yet. He has announced that he is changing the rules that will pave the way for the privatization of industries that Argentina has previously nationalized under leftist governments. Not a moment too soon. Argentina almost went full Venezuela there. Never go full Venezuela. They're talking about privatizing their airlines first, which are massive cash-burning, money-losing operations. Also, YPF, that big Argentine national oil company, is ultimately the goal here, although that one is probably going to take a few years to spin off into private hands. And Milei has his work cut out for him because he's got to get that through his Congress, where his party is the minority. So you can expect that he will run into opposition there. Another big story going on that hit the tape yesterday afternoon. Warner Brothers Discovery has announced that they're buying Paramount. Or at least they haven't announced they're buying. The rumor is spreading that they are in talks to buy Paramount. Sorry about that one. That's an important detail. But more consolidation in the streaming space, that's important. Watch out, Disney. Bad news for Disney there, who's already losing money in their venture into streaming, because when Warner Brothers merged with Discovery a few years ago, that created a new rival streaming platform that is now profitable, while a lot of the other streaming platforms are still losing money. So Warner Brothers Discovery is profitable. You've got Paramount, who another streaming platform, they've got Paramount Plus. They're losing money. They have a big pile of debt. Well, Warner Brothers Discovery has proven to be very good at cutting costs and returning to profitability. So a merger there would create a new streaming giant that would rival Disney Plus, which is losing money hand over fist with Star Wars and Marvel. Congratulations on figuring that out, Disney. So you can expect to see more consolidation in the streaming space. That is continuing today. And there's some news going on in vehicles. There was a pretty big story that didn't get any attention over the last few days There was a fire at a GM electric vehicle plant. Shout out to all you folks on my Patreon group who we were talking about this one yesterday. I hadn't heard about this until the Patreon call yesterday. There was a 3-alarm fire at the GM EV0 plant, or Zero EV. I forget the actual name of the plant. But it took 18 fire engines, over 60 firefighters to put this fire out when it looks like a forklift breached a container of the metals that go into the batteries. Now, GM spokespeople are very quick to come in the news and say, oh, this wasn't our cars. This had nothing to do with our vehicles. This was just an accident elsewhere in the plant. They're trying to play down the fire risk of electric vehicles. Well, it was the metals that go into the batteries that are the fire hazard in the vehicles, and that's what caught fire at this plant, causing a 3-alarm fire. So, yeah, this was related to your vehicles, GM. Electric vehicles have a big fire hazard problem. It's the elephant, or one of the elephants in the room with EVs. It's one of the reasons why I will never park an EV in my garage underneath where I sleep, because it's full of a giant liquid metal. I mean, in their defense, gas tanks are pretty flammable too, but at least gas tanks, you can put them out. Once liquid metals, or once these I forget the term for them, rare earth metals, once they catch fire, there is no putting them out. All you can do is surround and drown. Just dump water on it and hope it doesn't spread until all the metal burns itself out. That's really all you can do. And that's why so many firefighters had to respond to this plant. But even more bad news for vehicle makers, we are potentially looking at the largest recall in vehicle history. Right now, the National Highway Transportation Safety Administration is pushing for a $10 billion airbag recall, and across the board forced mandatory recall for these airbags. This is bringing back shades of that big airbag recall about 10 years ago, which up until this point was the most expensive vehicle recall in history. And a lot of the big automakers have already been doing voluntary recalls of some of the models that are affected by these airbags. But the NHTSA is saying that's not good enough. We want you to do a mandatory recall of all of them. And if that goes through, that would be the biggest recall in vehicle history. So more bad news for the automakers, who are struggling with slumping vehicle sales right now because people can't afford cars. While a $10 billion airbag recall, that is sure not going to make cars cheaper for anybody. Although it might make them safer, again, you have to balance the human lives versus dollar average, the dollar cost to do it. How many lives is it worth bankrupting GM? Thank God I don't have to do that math. I'd hate to be that guy. Another story going on today, or hitting the tape yesterday, China Aoyuan, which you may recall from some videos I did a few years ago, is another one of those big struggling developers, not quite as big as Evergrande or Country Garden, but they are still a big multi-billion-dollar company with billions of dollars of debt. They have filed for bankruptcy protection in the United States, Chapter 15 bankruptcy protection, just like Evergrande did a few months ago. Chapter 15 bankruptcy is when a foreign company is declaring bankruptcy in a foreign court. They file for Chapter 15 here in the States to protect themselves from the U.S. going after their other assets. So this is another step toward the liquidation of China Aoyuan. And guys, the elephant in the room with the China housing collapse is still what is going to happen with Evergrande's assets. The court in Hong Kong has been kicking that can down the road for months now. The deadline right now, I believe, is January 29th, is when Evergrande has the deadline to cut a deal with their foreign creditors to avoid liquidation. And China really doesn't want liquidation, because liquidation means all those unfinished buildings, all those projects, all those assets, heck, even the bulldozers and the construction equipment, it all goes up for sale all at the same time. And then we get price discovery if that happens. They would much prefer that the creditors just say, you know what, I'll take 5 cents on the dollar in exchange for my bonds and we'll call it even. That's the outcome that the courts are hoping for. That's the outcome that the CCP is hoping for. Because if we don't have that outcome and everything goes up for sale, well, then crap, now we might have price discovery in the Chinese real estate market and Chinese developers, and nobody in China wants that to happen. So they're basically rigging the price of these assets right now by preventing the sale. And the Hong Kong court keeps saying, you guys have this much time to make a deal. And then that time elapses and they haven't made a deal. And the court says, okay, you've got another month. That month goes by. They still haven't made a deal. And the court says, okay, you got another month. I'm really serious this time. Sooner or later, they're just going to have to liquidate this stuff. And then we find out how, well, nobody wants to buy it. And with that, why don't we shrink my big melon of a head? Let's see what's going on in the markets today. Don't forget that like button for the YouTube algorithm. And if you're new here, hit that subscribe button and have your coffee with the melon heads every morning. Right now, the S&P 500 is up 33 points ahead of the opening bell, or 0.72%. That's after that everybody was saying stock market crash yesterday. The market did sell off pretty consistently yesterday afternoon. There's a lot of theories flying around about the VIX and about zero data expiration options and market makers. Whatever it was, it looks like the dip buyers are back already because stocks are back up ahead of the opening bell. The Dow Jones is up 226 points ahead of the opening bell, about 0.6% higher. That's after shedding almost 500 points yesterday. And the NASDAQ is up 1.1% higher for the tech-heavy NASDAQ. So stocks are a sea of green this morning. The DXY is heading lower. Look at that. We got a 101 handle on the Dixie this morning, down another 53 basis points. The dollar is getting weaker because Fed is going to lower rates, and that just continues. We were at a high of about 107 not too long ago. This thing just keeps falling, weakening against other global currencies, now at 101.88. So we got a bit of a spilled milkshake here for those who follow Brent Johnson's dollar milkshake theory, although I'm not convinced the jury is out on that the milkshake is dead. Just for now, with the Fed in dovish mode, the dollar's probably going to continue weakening for a while. That could change on the dime if we end up in a credit event or some kind of a big deflationary debt spiral where dollars become more scarce, which is happening in pockets of the economy. We could see the Dixie flip and go vertical the other direction. Bonds right now are mostly red across the board here. We've got the 30-year Treasury yielding 3.995, down 1 point this morning. The 10-year, 3.850, down almost 3 points. The 2-year is yielding 4.328. That's down 4 points. And the 1 month is sitting pretty at 5.347, pretty much where it was yesterday morning. Watch those T-bill and chills, guys. Those 1 month Treasuries, the yields are starting to tick down a little bit. And let's see. Oh, we got 2 windows open for bonds. Let's look over at commodities this morning. We've got February gold futures, $2,049.75. That's up $2 this morning. Quiet morning for gold. We've got March silver futures trading at $24.47. That's down 15 cents, about 0.63% lower. Platinum down 1.3%. Palladium down about 0.4%. West Texas Intermediate February crude oil futures at $72.98. That's down almost $1.25 this morning. Let's talk about oil, because this is the big one here. Angola announces exit from OPEC amid spat over oil quotas. Got to watch out for that spat. It'll get you every time. Angola announced it's leaving OPEC following 16 years of membership amid a fractious dispute over production quotas. Not just any dispute, folks. This is a fractious dispute. It's got a lot of fract to it. Luanda had rejected a reduced output limit imposed by the leaders of the cartel to reflect the country's dwindling oil output capacity. State-owned Journal de Angola reported the decision, citing Mineral Resources Minister Diamantino Azevedo. How was my pronunciation, everybody? Several other members have quit the group in recent years for different reasons: Qatar, Indonesia, and most recently Ecuador. So we are now sitting at 12 countries in OPEC. Now, Angola, not the biggest member of OPEC. They produce about 1 million barrels of oil per day. Roughly 1% of global oil consumption comes out of Angola. So this isn't a deal breaker for OPEC, but this is something OPEC is going to have to consider, because Angola was one of the holdouts. They didn't want that production cut that OPEC just announced in order to keep prices up, a production cut that had very little effect on price, I might add. And well, OPEC cuts production. It has almost no effect on price, and they lose members anyway. That's got to factor into the calculus. If OPEC decides they want to cut production again to try to get oil prices back up around $80 a barrel where they want it, they have to consider, well, we might lose another country. We just lost Angola. Maybe somebody else leaves if we do this again. So OPEC is losing a little bit of their sway here. Every time a country leaves the cartel, they have less and less control over the price. And also related to oil news, we got this one. This is kind of a laughable headline. U.S. buys 2 million barrels of oil for the Strategic Petroleum Reserve. A few months ago, the U.S. announced plans that they were soliciting bids for 3 million barrels of oil to refill the SPR. Well, they only bought 2.1 million barrels. The United States bought 2.1 million barrels of crude oil, the Energy Department said on Tuesday, to help replenish the Strategic Petroleum Reserve after the largest sale in history last year. The department said it bought the oil for delivery in February for an average of $74.23 a barrel. Now, that is well below the average of $95 a barrel that they sold the oil for last year. So the government is getting a really good deal here. This has been a very good trade. They dumped the SPR last year to control prices. Yeah, that weakened us geopolitically, but we sold it for $95 a barrel, and here we are buying it back for $74.23 a barrel. So it's a good trade. The government is profiting off of this deal. However, let's put this in perspective here. The United States has now purchased 11 million barrels for replenishment after last year's sales. And it's been about a year, right? We're at the end of the year here. So for all of 2023, the U.S. bought 11 million barrels to refill the SPR. That is after we dumped 180 million barrels. So even though this trade has been profitable for us, it's going to take us 16 years to refill the SPR, to undo the damage to the SPR that was done in 1 year last year for the sake of poll numbers. It's going to take us 16 years at our current pace to make up that difference. And that's assuming oil prices stay low during those 16 years, which, hey, have you looked at the Middle East lately? That may not necessarily be a good assumption. Let's take a look at oil prices here, guys. Now, this chart is important here. This is going back to about the beginning of this year. And this just goes to show you how bad the demand situation is, because we've got war in Israel. We've got potentially war in Yemen, which, let's be honest, it is a war in Yemen. Just because we haven't gone on the offensive yet doesn't mean we're not at war. We're sending warships. They're shooting at boats. That's war. That's kind of how you define it. Luckily, nobody's been killed yet, but how long can that last? But despite all that, look at how low prices still are. That goes to show you just how bad the demand situation is. And again, remember the fracture in OPEC, Angola leaving because of production cuts. The oil market is a mess right now because the global economy is slowing. It's slowing substantially. And yeah, all these jobs numbers and all these consumption numbers, they're also great. All these government statistics. Well, how come nobody's burning any oil then? It's not the solar panels. I can guarantee you that. Well, even though, I mean, take a look here. Here was, where are we at? Where's October 7th? The biggest terrorist attack in the history of Israel. That was the size of the rally in oil prices that caused. We went from about, what, $82 a barrel to $88 a barrel. And then we resumed falling. And then OPEC announced their big oil production cut. That was enough to take us from about $72 a barrel up to about $78 a barrel. And then again, we resumed falling. And now here we are with war breaking out in the Red Sea and the Bab el-Mandeb Strait being closed. And that takes us from about $68 a barrel up to $74. So we're getting these $6 a barrel crises, right? The war in Israel, the production cuts, and now the Red Sea. They're good for about $6 a barrel. And then very quickly, the world remembers, that's right, we're heading into a global recession. Demand is falling, and the price resumes its downward move. Now, I would add, there is a real geopolitical risk here. I think I'm going to do a video about this one later today. The numbers virtually guarantee we end up shooting back in Yemen. And I'll go into a little bit more detail, but just based on math alone, it is only a matter of time before the war in Yemen escalates. I think it's unavoidable right now. And unfortunately, if the war in Yemen escalates, if we go on the offensive, that means this blockade could potentially spread. And the Strait of Hormuz, folks, that is the alpha and the omega of this situation, is that Strait of Hormuz. If something happens there, then we're not going to be talking about double-digit oil anymore. We will be talking about triple-digit oil, high hundreds, possibly $200, maybe even $300 a barrel in that situation. And we're only a few escalations away from that happening. Meanwhile, Javier Milei, he has set up Aerolíneas and YPF for privatization in Argentina. The new president vows to sell off tens of state companies. The sweeping decree, though, still needs support from a divided Congress. There is Javier Milei without his chainsaw, I might add. Javier Milei took the first step to privatize state-run Argentine companies with a sweeping decree that opens the door for private business to take control of key sectors. Milei, a libertarian who wants to shrink government and deregulate to flip the switch on Argentina's crisis-prone economy, announced a slew of reforms Wednesday that would allow tens of state-controlled firms, many of them money-losing, that's because they are state-controlled firms that they lose money, to be sold off. Milei campaigned on this message, mentioning national airline Aerolíneas Argentinas, rail networks, state media companies, and water and sewage company ASA, am I saying that right, as assets to be sold to private operators. He also said he'd target state-run oil driller and refiner YPF, an energy company Enarsa, after a transition period. The only company Milei singled out in his announcement was Aerolíneas, which the government has spent hundreds of millions of dollars a year to prop up. He said he'd authorize a handover of shares, likely to employees, and would at the same time free up Argentina's air travel industry. And this is kind of the punchline here. You've got a libertarian who says he wants to privatize a company. And I get it, privatize a company, that's a very libertarian move. And libertarianism is kind of the polar opposite of communism. But look what he wants to do with the shares of this company. He wants to hand the shares over to the employees. So that almost sounds like worker ownership of the means of production, doesn't it? Go figure, you've got a libertarian who's actually talking about handing ownership of the means of production over to the workers, even though that's something communists have been promising to do since communism has been a thing, and they have never done it. Not once. The workers get poor under communism every single time. But I would add, guys, that this is not a guarantee. While Milei can seek to privatize companies by presidential decree, he's nevertheless likely to face pushback in Congress, where his party is a minority and may struggle to get enough votes to pass the divestments through. So this will be an uphill fight for Milei, but libertarians around the world are watching with bated breath, wishing him well. Good luck, sir. And I'm sure we're going to get the comment that Milei is a WEF plant because there's a picture of him standing in front of the World Economic Forum banner out there. Give the guy a chance. Let's see what he does. Let's see if he backs it up. He still hasn't gotten rid of the central bank, something he said he's going to do. Will he actually do that? Oh, I cannot wait to report that. If he actually does that, I cannot wait for that day. We will be celebrating here in Melonville in the People's Republic of Jakistan if they ever do get rid of their central bank. Warner Brothers Discovery and Paramount Global are in early merger talks. Look out, Disney. A new streaming giant is in town here. Warner Brothers Discovery and rival Paramount Global are in early merger talks. A source familiar with the matter told CNBC. The news comes as speculation about Paramount's future heats up. Controlling shareholder Shari Redstone is reportedly eager to make a deal. Redstone controls Paramount through her company, National Amusements. Paramount, whose assets include a namesake movie studio as well as broadcast network CBS, is carrying a hefty debt load as well. Meanwhile, Warner Brothers Discovery, the result of a merger between Warner Media and Discovery back in 2022, has been slashing costs and attacking its debt levels under Zaslav. The company has since said its streaming business has become profitable, while other streamers outside of leader Netflix try to reverse losses. So this is more bad news for Disney. We'll see. Again, this is just in early talks. This is rumors that people are eager to sell and that they're talking. So no announcement yet. But I think we're probably going to continue to see consolidation in the streaming space because other than a few key players, everybody who's tried it so far is losing money. And GM has shut down production at their Factory Zero EV plant after a fire breaks out. And this is kind of big, guys. A fire at GM's factory plant Tuesday night caused the automaker to halt production. No employees or firefighters were injured, thankfully, but the building was evacuated. This was a 3-alarm fire. It was supposedly started when a forklift struck a container that was holding some of the metals that go into the EV's batteries. Those metals, once they catch fire, guys, just get out of the way because you're not going to stop it. They just need to burn themselves out. And the firefighters were not messing around with this. They made this a 3-alarm fire, which means additional assets were called in, and then additional assets were called in again. 18 fire trucks responded, over 60 firefighters. This thing burned for hours. GM is trying to downplay this thing, guys, but hey, this is EVs. They are a fire risk, and once those fires break out, there's nothing you can do but get out of the way. They're just going to slowly burn themselves out. This one happened a few days ago, only hearing about it, and this is an electric. No word about this in Bloomberg, no word about this in the big, mainstream press or mainstream financial press. Guys, EVs have a whole laundry list of problems. The EV space is getting worse. There are layoffs happening in EVs. There are production cuts happening in EVs. Even though we are subsidizing the hell out of electric vehicles, the market just doesn't want them. No matter how much money you throw at it, you can bribe people to buy them, and they're still not buying them at a pace needed for these companies to be profitable at this level. Tesla is the one exception, although Tesla is more of a status symbol than a practical vehicle. And another thing that's hurting automakers, car makers are fighting a massive airbag recall that may cost $10 billion. The car makers are pushing back, but the regulators worry that a piecemeal response might repeat history. Car makers are lobbying against an extraordinary push by U.S. regulators to force a recall of as many as 52 million airbag inflators. Companies like GM and Ford said in a letter to the National Highway Traffic Safety Administration released Wednesday that there's no proof that the parts made by ARC Automotive are defective, despite reports that some inflators have exploded in a crash, injuring or even killing passengers. NHTSA is calling for a broad recall over ARC's objections, a move that may cost automakers up to $10 billion. So this isn't the first time there's been a big airbag recall. The automakers have been doing this one at a time, voluntarily on their own. And the NHTSA is saying that's not good enough. There's a big problem years ago. A lot of people got killed when these airbags were going off when they shouldn't have. We had this big recall. We're not sitting around waiting this time. We want you guys to just go recall all of them all at once. That would be what did they say? 52 million vehicles could be recalled if that happens, guys. That's like a third of, I don't even know how many vehicles are on the road. It's got to be like 1 in 3 vehicles in the whole country could be recalled over this. That's a huge number. So this could be a very big story. This could be very bad news for automakers. That's one to keep an eye on. And lastly, real estate developer China Aoyuan files Chapter 15 bankruptcy. Another real estate developer from China filing for bankruptcy protection here in the States. The Chinese firm is the latest to seek U.S. shelter from creditors. Real estate developer China Aoyuan sought Chapter 15 bankruptcy protection in New York on Wednesday. Court papers showed Chapter 15 bankruptcy protects the company's U.S. assets while restructuring arrangements are worked out elsewhere. International debt restructuring deals sometimes require a Chapter 15 filing in the course of finalizing a transaction. So, guys, this is just another one bites the dust. Chinese developers dropping like flies. Slow motion train wreck, much like the commercial real estate bubble here in the United States. It's taking forever to play out, but there is a massive, massive deleveraging is due in China. You can delay it. You can move it around. You can change who gets screwed over when that deleveraging happens, but you can't undo it. It has to happen. You can't avoid it outright. These buildings, they're just not worth anywhere near what people paid for them. Some of these buildings, which aren't even built yet, are not even worth what people paid for them. Even though people paid for the building, they're still owed a building. And that's what China really wants to avoid. And I would add, guys, China is desperately trying to make sure all of these pre-sold apartments that have already been bought, that already have mortgages taken out on them. People are already making mortgage payments on apartments that aren't even built yet. And China desperately wants to avoid those people losing everything, because last year there was that big mortgage boycott that resulted in protests at banks. That's a risk to social stability, something oppressive governments desperately want to avoid. And so China is trying to figure out ways, trying to force banks to extend credit, trying to force these deals to avoid liquidation, desperately trying to make sure that these tens of millions of apartments that are still owed, I believe it's something like 20 million apartments, have already been bought and haven't been built yet and have mortgages against them. And China's trying to make sure those properties get built and handed over to the owners. Here's the problem. When you've already got a housing bubble that's been created because of 65 million vacant apartments, building another 20 million vacant apartments is not how you solve that problem. That just makes the problem worse. So everything China is doing to try to prevent this real estate collapse in the long run is just going to create more supply, is only going to make it worse. Oh, and by the way, why China already has tens of millions of vacant properties, their population is shrinking because of the stupidity of the one-child policy. Ladies and gentlemen, communism. Isn't it great? Gotta love that worker ownership of the means of production. And I just want to say thank you so much to Mr. Dan Hedin, who says, someone buy Star Wars or Marvel, save them from Disney. Good God. Let's start a GoFundMe to buy Star Wars and make it cool again. OMG. The first thing I would do, wipe out the prequels, wipe out the sequels, start over from Return of the Jedi. That's the first thing I would do if I bought Star Wars. And I got a whole shelf of Bantam and Del Rey books about Star Wars that I spent my entire childhood reading. They are awesome, fantastic stories with well-developed, nuanced characters that you might actually care about, not just Mary Sues who check a box because it's trendy in Hollywood. Maybe we could make movies out of those. Be true to the source material. I just throw it out there, guys. You do what you want with them. From your mouth to God's ears, Dan Hedin, what an idea. Somebody please buy Star Wars and Marvel and make it cool again. And thank you, Mike M., who says Meta insiders sold $390 million in 6 months. Well, we are seeing a lot of insider sales, especially among the Magnificent Seven, Mike. I would add $390 million for Meta insiders. I don't know off the top of my head, but I'm gonna venture a guess to say that's probably a very small percentage of what they actually hold. We saw the same thing with NVIDIA. I had a lot of people message me along with the hate mail from the NVIDIA bros, which is hilarious, by the way. I did get a lot of messages from people, NVIDIA bears, who were saying, hey, look at all the stock that the executives are selling, that they're dumping. It's tens of millions of dollars, hundreds of millions of dollars. And yes, that's true. But like take like a Jensen Huang over at NVIDIA. He owns something like $30 billion of NVIDIA stock. So when he sells 200 million of it, is that really news? He's selling a couple of percent, low single-digit percent of his holdings. Now, you could argue that's as much as these guys can sell without scaring investors. So maybe they're being strategic about it. Maybe these small sales at historically bloated valuations that we all know is a bubble, maybe they're selling just as much as they think they can without crashing the price. So maybe that's why these numbers are so small. But I would say it's not panic levels yet, Mike. If you see these guys selling a third of their position, if you see them selling a half of their position, now it's time to worry. Now these guys are cashing out, and they're cashing out fast. But for right now, most of the insider sales that I'm seeing are pretty small, not quite to panic levels that I'm seeing. But again, I don't, by the time the big sales happen, it's already too late. Thank you, Mike M., for the super chat, the support of the channel, sir. And thank you, Evan Francis, says, pay attention to the bank term funding program. It's still going vertical, even with lower interest rates, and banks are still screwed. I have seen that. I've seen the going vertical. It's still rising, the BTFP. I don't know that I would quite say going vertical, Evan. It is on the rise, and it's still going up, and it shouldn't be. If the banks are supposedly okay and the crisis is over, why are they going there to borrow money? And I would also add that the bank term funding program is coming up on its first birthday, Evan. And remember, the bank term funding program was supposed to be a temporary program, and it's coming up on its 1-year anniversary. Are they going to extend it? Are they going to renew it? Is this going to be another one of those permanent temporary government programs? We'll find out in March, but it's about to turn a year old. And you're right. That's a great point. It is on the rise. Banks more and more are going to the BTFP to borrow cash, and that is expensive cash. It costs over 5% to borrow that money. So banks don't go there and do that unless they are in dire straits. Thank you, Evan Francis, for the support of the channel and the super chat and the good comments, sir. And thank you, Thornton Mellon III is back again. He says, I'm short on China, YXI. I'm not familiar with that one. I'll have to look into it. But I'll be honest with you. I think we are still in the early innings of China. There are some people who are saying the bottom is in China. I really don't think so. Not when they still owe tens of millions of apartments and that bank debt is still out there. Banks are deleveraging like crazy in China right now. There was a story in Bloomberg yesterday about how they're selling distressed debt, getting it off the balance sheet of the banks. And I'm just sitting there asking myself, who's buying this garbage? Who is buying distressed developer debt in China right now? And what are they actually paying for it? The article was a little short on details, but the banks are trying to dump this garbage before it blows up in their faces. It's going to blow up in somebody else's face, I guess. I don't know who that's going to be, but it is going to blow up. You can't prevent deleveraging. You can only delay it or spread it out. You cannot stop it. You can only hope to contain it. And in my opinion, the China housing bubble, the biggest speculative bubble in history, cannot be contained. The problem is just too big. And on top of everything in the short-term problem, long-term, you've got the problem of the population is shrinking now. So you've got less and less people to live in the buildings over time. It's only going to keep getting worse. That population collapse in China, something Peter Zion has talked a lot about in some of his TED Talks and some of his videos, actually pretty good. And that's a real deal, folks. The population shrinking in China, it's already happening. It's a good bet it's happening a whole heck of a lot faster than the government is admitting. Fewer people to live in even more buildings. It's not too hard to figure out what happens to price in that scenario. Thank you, Thornton Mellon III. Good luck with your short, sir. And thank you, everybody, for joining us this morning on the Morning Update Live. Thank you to my Patreon supporters for everything you guys do for the channel. You guys are awesome. Links down below to all that good stuff. Hi, Mom. Hi, Dad. I love you guys. Until next time, live small and dream big.